What's going on, everybody, and welcome back to the channel. So today I want to talk about some of the things that you could be doing as a long-term investor to help take advantage of any market weakness, whether we see a stock market crash, correction, pullback, whatever you want to call it. Now, I don't know if this is true, but I get the feeling that as an investing YouTuber, I'm supposed to sit up here and tell you guys all the best practices and try to make it seem like I'm the perfect investor and that I follow all the rules to a T. Now, if you're looking for that perfect investor to tell you what to do, then you should probably go to another channel because I'm not perfect by any means and I definitely do break the rules sometimes. So in today's video, I'm going to be breaking down 3 things that you must be doing if you want to take full advantage of any weakness that we may see in the markets. Now, if you guys find some value in today's video, please be sure to drop a like because it helps out the channel in a massive way and I can't thank you guys enough. Now, one last thing before we get into today's video is I want to let you know I will be announcing the winner of the 1,000 subscriber giveaway in another video that I'll be uploading shortly after this one. So I think the number one issue that most retail investors have problems with is managing their cash positions.
Bankrupt, no money on my card.
Now, if you're low on cash, there's really only 2 ways that you can get more. The first is to just add more cash to your brokerage account, but the second way is to sell stocks. Now, I think this is an important topic to talk about because the majority of us don't have thousands of dollars at the end of each week where we can just throw money into the stock market with the snap of a finger. So this is definitely an important topic, and I think this might be the biggest one of the video. Now, before I get into my strategy for both of these options, let's first talk about the cash rule that I'm sure you've heard on many other channels, and that's the 10 to 30% rule. Now, if you've never heard of the 10 to 30% rule, then this is basically what it is. If we're in an uptrending market where the market's just going higher and higher, you want to be closer to the 30% cash level because this means that when the market does pull back, which it will eventually do, you have enough cash on hand to go ahead and deploy it in the market and buy up the dip. Now, as you're buying the dip, you want to start deploying that cash little by little, and by the end of it, you want to be somewhere around 10% because you want most of your money in the market. Now, I don't personally follow this rule down to a T because when I have 30% cash, I feel like I'm not invested enough, and that's my own personal preference. Obviously, if you can get to 30%, that's really good, but it just doesn't work for me personally. Generally, I'm anywhere from 5 to 15%, maybe 20% in cash. Like, for example, 2 weeks ago when the market peaked, I was at about 17%. Right now, after the dips, I'm at about 8%. So I lie somewhere in that 5 to 20% versus 10 to 30. So this isn't a rule that you need to follow exactly and have the same exact percentages to be successful. I think it's just something where it's really like a guideline and you just have to pick what percentages you're most comfortable with. You've just always got to remember that cash is definitely king. You cannot buy stocks if you don't have cash, and unfortunately, I know there's going to be a lot of people that did not have enough cash. All their money was in the market, and when we saw the recent pullback this week, a lot of people were stuck just watching and not being able to buy. Just like the GOAT Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. So I'm going to share some tips with you guys to make sure that you never ever have another cash problem again, and these are strategies that I use myself. So like I said at the beginning of the video, if you want to increase your cash position, there's really only 2 ways you could do this. Option 1 is to transfer more money into your brokerage account. Now, what I personally do is I set up either a weekly or a monthly automatic deposit. This way, I never have to think about it. For my Robinhood, I do a weekly deposit, and for my Fidelity, I do a monthly deposit. This way, it's kind of offset, and I'm not just taking a big chunk out of every single paycheck. This automates the process and ensures that your cash position is constantly growing without you having to manually put money in it. Now, if that's not enough cash, then you always have option 2, which is the one that I feel most of us use, but secretly you don't want to admit it because it kind of goes against the long-term investing strategy. And of course, that's selling stocks, something that should be a last resort, but often feels like a first resort. Now, this is a serious one because if you're going to sell stocks to raise more cash, you want to at least do it strategically. So my strategy for this, in its simplest form, is to sell the stocks that you believe in the least and have the least conviction in. Now, obviously, there's a lot of factors that you need to take into consideration before you do this. For example, if you're currently down on one of the stocks that you really don't have a lot of conviction in, how much are you down? Because personally, if I'm only down like 5%, I'm going to take that loss. This way I have cash to put into higher conviction stocks. And the perfect example of this is Fubo TV stock. I had a massive position in it and was definitely over leveraged in that position. So I ended up selling and just trimming my position. This way I could raise cash. Now, it doesn't mean that I don't like Fubo TV stock, because if you follow the channel, you know I'm very bullish on this company. I just over leveraged my position and it wasn't something I really felt comfortable with. So that's how I like to go about raising cash when it comes to selling stocks. I like to do it strategically and really look at the position that I'm selling, because at the end of the day, I believe in all of my positions. But there's always going to be that one position, let's be honest, that you kind of, I don't want to say YOLO'd, but you kind of believe in them, but you just haven't done as much DD as maybe some of your other stocks. And those are the ones that I usually target first when it comes to raising cash. So I hope this section of the video gave you kind of a new perspective on how to manage your cash positions. And if you aren't already taking these steps into building those cash positions, definitely start, because as you could tell, there's a lot of volatility in the market and there are some deals out there when the market's down. So now that you have your cash position built and you're ready to take advantage of any dips in the market, how do you know which stocks to buy? As you can see here, I have a ton of watch lists, and one might even argue too many. But it's a really handy tool that can be used when deciding which stocks to buy in a dip. You can see I have a top stocks list, which obviously are some stocks that I'm looking to start a position in. But then I also have other lists, like a research one, which are companies that I still need to do due diligence on. And then I also have industry lists like virtual world stocks, drone stocks, digital wallets, aerospace, and so on. And if you've been following the channel for a bit, then you might recognize some of these industries from the ARK Invest video I made a couple weeks ago. Now, if you're a fan of Matthew Woe's channel, then you probably already know where I'm heading with this, but he recently put out a video kind of on the same topic of this one, and he made a great point about having a valuation issues list, which is basically a list of companies where you've already done the due diligence, you already know about the business model, believe in them, you like it, but the valuation just isn't justified. Now, the benefit of having this list is that you already have a group of stocks that are your go-tos, you like the business, and you're ready to buy them when they hit that certain price target. So if you don't already have a list of stocks that you're ready to jump on as soon as they start dropping, then I highly suggest you put a list together, because without that, then you're really just scanning through the market or trying to remember which stock you liked and why you liked it. So definitely go ahead, create lists, create as many as you need. You can see I already have several lists, and like I said, it might be too many, but I'd rather have too many than not enough. All right, so you got your cash, you got your watch list, you bought the stock that you love so much and you've already done research on. Now, how do you handle the volatility of the market potentially dropping even further? Now, I'm a firm believer that you really have to learn how to handle volatility, and that's best done through experience. Back in March, I got my first real taste of how to handle volatility, where you are literally just watching your stocks drop by 30, 40, 50%. Now, I'm not going to sit here and say that it was easy, because it definitely wasn't. I mean, watching my account go from $17,000 all the way down to $11,000 in the span of 4 weeks was definitely not something easy to go through, but I diamond handed the shit out of it and really just bought the dip. As a long-term investor, you just have to remember that the reason we got started investing, not trading, is because we wanted to build wealth over a 20-30 year period. Now for some tips on how to handle seeing your account deep in the red, and what I personally did back in March. If things are getting crazy, just turn off your phone or turn off notifications. Just do something else to get your mind off of it, because anything is better than staring at your account dropping minute by minute. And if that doesn't work for you, you can take it to the next level, where someone in my Discord actually proposed just deleting the app, which definitely could work. However, I wouldn't recommend it, because if you delete the app, how are you gonna buy the dip? And finally, my best tip for you guys, if you can't handle seeing your account down, just remember, Melvin Capital lost billions of dollars in a matter of like 1 month. So anytime you see your account down, just remember, they lost a lot more money than you. So I hope you guys got some value out of today's video, and I hope that you can start preparing for whether we see a crash, correction, pullback. I'll just leave the speculating to CNBC. I'm not gonna do that on this channel. but at least now you guys are better prepared. So if you guys enjoyed it, be sure to drop a like and subscribe to the channel because I do upload twice a week. And with that being said, thank you guys for watching.